is not known to them at the time that they passed the special assessment. I already explained to you in response to your message that because we have a mid-year insurance renewal, you look at the 2022 budget, for insurance was $824,000. The premium for 2022 into 2023 was 1.4. So we ended up using that contingency that you're referencing is already gone because we used it to fund the insurance shortfall in the 2022-2023 year. Because we were faced with that. When we passed the 2023 budget, we increased the insurance from 822 originally in 2022 to 1.6 because we knew already that we had a premium shortfall from January to December, and then we added another 10 or 15% to that to assume that there'd be another increase or some increase. We never expected that the increase would be that tremendous. We did forecast, and we had a conversation with the brokers about that. So
with their broker, one broker.
With the hundreds of brokers that work in that organization.
No,
notwithstanding that,
one broker.
I'll get into that question. So that's why the contingency that you're referencing, which I've already responded, is not available to the association to use again. It's already been used. Wow. So we have an insurance representative here. He can answer all the insurance questions and how the state of the market has impacted Castle Beach. And we have our attorney here who represents over 150 other associations with experience in what's happening with other organizations in similar state of affairs with respect to insurance and other items pertaining to association. Jason, do you want to explain to them how this happened in the marketplace?
The market itself, what the process is. We are, like I said last time, we are in crisis. We do not have carriers left in the market. Everyone's out of the business. They don't want to be here. They don't want to do business in Florida. It's a very litigious, very not carrier-friendly situation we have going on right now. You turn on the news, put on the TV, everything is negative. So insurance carriers, they're leaving the market. We're trying to do things slowly to bring carriers back. I was talking about it earlier with one of your residents. That the state has done a couple of bills that they passed, which were a little short-sighted for me. I think they're set up for bringing carriers back to the market. We won't see a relief of this for the next couple of years. We're in crisis. We have lawsuits are greater here than anywhere else in Dade, Broward, and Palm Beach County. We have more insurance claims through a lot of hurricane losses and tropical storm losses in the last couple of years. Insurance companies don't want to be. So now, our process, we go to the market. We go to every single carrier that's still available in the market. They give us back a response, we got to put the story around it. This is a 6-month process. We start 120 days out from the renewal date to start negotiating with these insurance carriers. We go, citizens, they didn't want you. The reason behind this is a very transient community. You have 90% or 80% Airbnb. Is that correct? Around that number, more?
95%.
Okay, so now citizens looks at this building and starts saying, this is more of an apartment building than it is a condominium. So now that it's an apartment building, it's commercial. You see it as a commercial property as opposed to being a residential building. So that's why the difference in pricing more than anywhere else. When we did go to market, we didn't have full limits until the very last couple of weeks. But I believe you passed the budget. Then we had another round of insurance information, and we did get full limits on the correct.
So Wayne has the budget. What initial proposal was something we did not accept. The initial, in order to find affordable coverage, one of the concepts that was floated was not buying complete coverage, which is against the statute. In other words, there are buildings out there that are operating outside of the statute and outside of their own condominium documents. What they decided to do for money reasons is buy insurance and then limit their wind coverage to a certain $10 million. Now, our building happens to be appraised at $65 million. So we bought $65 million worth of coverage, which is required under the statute. But there are other buildings out there, and you're probably going to hear that we bought insurance that was much more affordable if you have friends and family in other buildings. But you have to ask them, did they buy the full coverage?
Were they offered full coverage?
Were they offered or did they buy it? And the issue is that the statute requires that we buy full coverage if it's available to us. And our condominium document states that as well. Imagine if there was a hurricane and we had more than $10 million worth of damage at Castle Beach. What would then happen? you wouldn't have the funds to restore the facility. And that also is a liability to the association, many respects. So we are complying with the statute, we're complying with the economy documents, and therefore we had to purchase what was available in the market. I sent an email to Rosa asking her, is there any leeway with respect to that? Didn't I not?
And I responded, by the way, we should mention that the meeting is being recorded, just announcing it
Sure.
because by law we need to.
Announce it.
So be aware that the meeting is being recorded for anyone who's gonna speak. If the board did reach out to us and to me with that question, and I responded to them that by law, the board has to use their best efforts to obtain full replacement value. If they don't, it's a breach of fiduciary duty for the board, A. B, the building is gonna be underinsured. And what some other agents and brokers are doing are they're shaving the windstorm coverage to allow for less than 100% windstorm. That's not legal. The only way that, I mean, I have a client a couple of blocks down this way that had a 400% insurance increase this year. 400%, it's a huge increase. It's happening up and down the coast, it's happening up and down the state. The only way, in my legal opinion, and I don't know if you agree or not, as the insurance professional, that an association can have less than full replacement value is if the property simply cannot get the coverage. And I just 2 weeks ago have a client who, for whatever multiple reasons, are completely non-code compliant, and the insurance company just wouldn't insure them. Not the least of which is that they have a roof that was failing. They can't get full replacement value. You guys can. So that I think is the difference. And, you know, to the extent misery loves company, and it is misery. I live in a condo too, and we got slammed also. So, you know, it's happening across the board. Do you agree? Is it JC?
Yes,
JC, do you agree that the only way an association can do less than full replacement is if they simply can't get it?
that is correct. What's been happening is we are submitting a best efforts letter in our application to the association, so they can go ahead and present that to anybody that has an issue of paying the lender requirements. We can go ahead and satisfy that by having this letter. No, it's not our case. We do have full coverage. So mandated by law. That's correct.
Anyone have another question?
I've got a simple, dumb question. So I have a townhouse. I don't know if any of you are aware of that. That's a joke. But so what happens if there's an event? If there's a storm, if there's wind damage and water comes into my place, what is covered and what is not? What do I have covered under the association policy?
He's good.
Correct. So there are two kinds of coverages. There's an HO6 policy, which is what you have on your interior dwelling inside. And then the association insurance is responsible for the shell, the actual building itself. So if you have lost, you have to have your policy represent you.
That means your own personal.
Your own personal policy will kick in.
So
But under the statute, I'll just pipe in, there are certain things that the association is legally responsible. For example, drywall.
Yeah,
if there's limestone,
The drywall, it's
drywall, even though it's not sometimes really structural, it's drywall, it's not,
No, but that's ours anyway.
it's theirs anyway. And by theirs, I mean the association's not.
so that's inside my unit, the drywall.
Yeah.
the plumbing, the electrics, correct.
And there's other things like cabinets, ceiling floor, wall
That's
coverings.
HO6.
That's HO6. Now, HO6 is your personal insurance. You might not carry that.
I don't have.
Right,
personal
and a lot of
insurance.
owners don't, but be aware that the association doesn't cover it, so if you don't go out and buy it from your agent, you're going bare on the content, same thing, furniture.
Oh, contents.
Yeah,
Yeah, I don't care about
Content,
that.
ceiling, floor, wall coverings, kitchen cabinets, what else am I forgetting?
Appliances.
Appliances and personal possessions.
Okay,
Well,
so
we-
that's not a big deal, but the big deal is like the structure,
Yeah.
replacing the
That's on
drywall
the
and all that.
association.
It's covered under the policy. So I keep thinking that I'm gonna be okay because I've covered under this policy I pay for every month, and it's going up just a little bit. So the problem's about to get worse. We haven't seen anything yet.
Depends
So
on the
wait
season, it depends on hurricane
2 or
season.
3 years, or 4 or 5 years from now. So anyway, I really appreciate the meeting. I appreciate what you guys are doing and appreciate the project.
And because you're on the first floor, forgive me if I'm wrong, the way I understand it is we have flood policy also, so you'd be more of a flood issue in addition to a hurricane issue.
Okay, so
Yeah,
I'm
that-
covered under rising water.
Yes,
And all the plans and all the replacement and all this insurance is gonna cover me. So it may be cheap insurance. Oddly enough.
Don't forget, I mean,
Relatively
what we're seeing coming to the market is affecting condominiums, it's affecting everybody across it. So if you're looking at, if you have a single family home, you're having a big increase, or you're paying $12,000 for your personal homeowner insurance. So what we're paying here with this big increase, when you have shared expenses, it's still significantly less than what you're paying for a home as a homeowner.
great, ours is divided differently.
Okay, so in generalities.
Yeah, the general. Any other questions?
I was just speaking to JC before the meeting and my agent, who's a commercial insurance agent, told me that the governor just signed an agreement that citizens can increase their rate by 20%. So the next time it rolls over, if you're with citizens, which I don't think we are.
You don't even qualify for citizens.
No,
You don't qualify.
but that's the last resort. So we're not at the last resort yet.
No, some of layered covers, but the citizens option is becoming more feasible as these layered programs become more and more expensive.
Wow.
We would love to have these citizens, but they require a 50-year certification and at least, or at most, 25% transient occupancy.
Well, it's-
We don't have that.
Well, I don't know if we have the transient occupancy or not.
Well, we have like 95% transit.
So my question is, once we get
Well,
the
wait,
Thank you.
50-year recertification, then will our next policy come in lower?
Maybe, maybe not, but depending on what the market does this year, the season just began. So we'll see what happens this year as well. I mean, you're looking at yours always a trend. It's always
Anything
behind,
else we can do to get the insurance down from a structural accident?
lower your Airbnb business 25%.
Yes. Wow.
Any other questions?
Wow. So who are we insured?
You're in a layered program, which is multiple different,
Brian County.
Who are they?
9 different carriers, ICAT, I believe, Velocity. I'm not sure the exact name of it. I'm not your agent, I'm just filling in for Richard.
I can read them. I'm just trying to read it. They each took a piece. of it, you know.
Nine different carriers.
That's because they couldn't afford to take the risk individually.
Right.
We have, our worst we've seen is 15 different carriers.
Wow.
Now imagine trying to build that together and you have different people
What
that
if we
pay
have a
different levels.
claim? Then we got all this.
It's all by limits. Thank God we don't have a quota share, which is multiple carriers within one limit, one layer. That's very good. But we're strict, it's here, it's 5 million, 10 million, so you know what everybody's paying at one.
Deductible, if we raise that, we get.
It's not really gonna make a change. You know, I mean, it's not really needed that much.
I haven't done
I
it.
have it, let me find it. It's kind of hard. When you do it on the phone, it's harder than on the computer.
Yeah.
Basically, reason why the
It's an older building, your occupancy is not considered most favorable. How old is the roof here?
It's 205.
205, so that's one credit we have. But it's where you're at, so now we have a lot of carriers that don't want to do barrier items. So if you're on Key Biscayne, Miami Beach, they don't want to cover. So we have less and less carriers, and one that are still left behind, we're charging more and more and more for that ability.
Okay, here it is. Hold on. This is, I asked for a list of all the companies that they went to, and the list was 2 pages long of all the companies they approached. By the way, there were at least 2 owners, maybe 3, that asked for to do their own due diligence at our invitation. In other words, they were suspect of the board, doubtful of the board did their due diligence, doubtful of their organization, and were suspicious of it. So we gave them all the information they needed with respect to seek out their own insurance policy. And to date, they have not been able to come up with anything. In fact, the information we're getting back from them is that we're looking to have insurance. Their problems. One hasn't responded yet, but we're waiting for a response. So I mean, it is, and I'm gonna speak to the process of getting insurance, because I learned a lot in the last few years, exactly how it's done. You can qualify it or not qualify. But everyone who's attempting to go out to the insurance market to buy insurance for Castle Beach, they're subjected to go to the same company. It's only a limited pool of companies that they go to. Because it's sort of a custom-made product, if their information speaks to the underwriters, they have a direct contact with. It's not like you're buying your Geico insurance online in your pajamas and you're insuring your car. You know, you have this long story for Castle Beach. They bring it to all these organizations. I can show you the list of companies that they approach to do so. Well, if another broker is going to do the same exact exercise, they're going to speak to the same exact people, and they're going to get the same exact answer. So that's how it works. So the only way they could get a better price, if it does exist, is to seek out a company that was never approached, which I don't think
Doesn't
exists. Because of the list, there can't be that many insurance companies in America.
So Lloyd's is a syndicate. Lloyd's not an insurance company. Imagine we're all investors and we have a marketplace, which is Lloyd's, and Lloyd's tells you, all right, I have an offer. I have a syndicate 1537, which is an insurance for a building. Who wants to participate on it? Couple guys raise their hand. Okay, then we create a syndicate just for that insurance. That's the way Lloyd's works. It's not a true insurance. We are the largest condominium broker in the state.
It's the CLI.
We insure over 1,500 condominiums. It's our expertise. We don't do anything else with this.
Yeah, this is,
So I can find it.
I can just read them off. Here. So Axis surplus has 10 million, QBE 5 million, HDI Global Specialty 2.5 million, Guide One. Guide One National 2.5, Arch Specialty 5, Wilshire 15, West Cheshire surplus 2.5, Kinsale 2.5, Axis surplus 2.5, Endurance American 2.5, Wilshire 15, QB Specialty, I guess, is 25 million. And then
So they attach at different points.
Homeland Insurance of New York, 25.
And the reason why they have different points is to
So
lower,
it's more than-
lower their premium and lower their exposure. So they have more of a share of the pie, but less exposure.
13, but two of them were overlapping in two different policies. So it's 9, but two policies.
Great.
So anyway, it's complicated, but we want it to be forthright and transparent. Everyone had a chance to answer and ask any question they'd like. Yes.
I have a legal question. So what happens? So there's a statute or requirement that the HOA has to have insurance on this building. Is that correct? So there's no, okay, so we could self-insure by going into a pool, correct? If we were able to find a carrier to do that and put all that together.
You can self-insure, but there's so many qualifications and limitations and obstacles and difficulties in self-insuring that I've been doing this for 36 years. I've never ever once seen anyone have to self-insure. Have you?
For a condo?
No,
Never.
you have to
HOA.
get in like a pool with, it's almost
Right,
impossible.
right.
You have to have, there's a lot more expenses on bringing a captive for a self-insured option.
Right,
You have to have a third-party administrator to administer the funds. You gotta
Right.
have a separate pool of money put aside as collateral for anything to happen.
so that would be a large check we would write as homeowners to
Uh-huh.
put into the pool. We benefit in the long term possibly by taking more of the risk maybe ourselves. So it may be less expensive in the long term, but the short term pains can be so much that it doesn't make sense.
You really have to park the money there and not touch it. Here you're paying premiums, they're spread out. And
So it's a less expensive option.
The fact that no one's done it in 36 years, I think just describes why it's not.
it's just-
All right, I'll shut up and won't mention that again.
No, it's a very
I meant
viable,
that
it's a
it's
very
I didn't
viable,
mean that.
it's a very viable
Well,
option
Matt-
in the private sector.
Right.
A lot of companies do this with their multinational companies that make a lot of money, and they're able to put that money aside and not pay rent. Because they're not looking at a 1 year in, 1 year out scenario, they're looking at the long term.
Okay. Any other questions?
On the insurance, no, I guess we're just stuck. I just want everybody to know, my payment went up $1,000, so if you're all complaining about 200, take 1,000, add it to 2,400 maintenance fee, add it to 2,000 more for the assessment. I'm
Done.
almost out of my apartment.
I do want to say that obviously we're talking about expenses and this is the reality of our building, of all condominiums. And we are also, right now, we've already hired a reserve study, a consultant to do our reserve study, which is something that's going to happen in 2025. Which obviously in your calculus, especially since everyone's running a business, you have to understand that that's another requirement that's going to occur. The exact amounts are not known. We just signed an agreement with the consulting company to do the study. It's going to take them several months to finish that study. And after we have the response from that, we'll of course share that with the community. But that's also going to kick in 2025. So condominiums have changed. There's a lot of dynamics that have changed with respect to this model in Florida, and I guess everywhere, especially South.
The reserve study before also can
Yeah.
confirm this was a simple
Process.
process. It had maybe 3 or 4 things, you know, the paver, the parking lot, the rules.
Windows.
Now it's long, since the certified project, it's a long laundry of things that will have to be included in the research study.
Well, and not just included in the reserve study, the harsh reality is that reserves that have to be funded, it can't be waived.
Yes.
Because one thing is to know how much you should have. And another thing is the statutory state obligation to fund those reserve accounts. Because right now, every condo has the authority to waive reserves, you know, you're sort of assuming the risk. But with these 8 defined categories, you can no longer waive, so.
And the money has to be in the bank.
What happened when you fund all the reasons,
Yeah.
you don't use it because you don't have damage? What's happening the next year?
Well, eventually you're gonna use it here, because, for example, to use a simple example of the roof, if you have a roof with a 10-year life. And you're funding every year, you're gonna get to the 10th year, maybe you've got a really good roof and it'll last you a few more years, but. You're gonna use that money that you have been accumulating to pay for that capital asset, which is replacement of the roof, so you will use it. You won't use it this year or next year, but you use it in 10 years.
Because every year that you extend it because it's in good shape, you have to have it certified. It's not just that you say, hey, we have a good roof, we don't have any leaks, blah, blah, blah. You have to have it certified. Eventually, you're gonna need a.
What I mean that if at the beginning we have to full fund
I understand. I know. I think I understand your
Okay,
question.
and saying when we use 20%,
No,
what
but you-
happens next?
Okay, so understand something, when the obligation is to fully fund, let's pretend, to make up a crazy number, your roof is gonna cost $100,000. You don't put 100,000 the first year, you're still going to fully fund 10,000 for 10 years. And so it'll be 10,000 and 20, then 30 till you get into the full amount, thank God. Because if not, it's impossible to have to put the whole amount one year to the other.
And say after you've paid for that roof, then you gotta start paying for the next roof.
Right.
It's based on the statute. So it's a permanent, the way I try to explain it to people is a permanent special assessment. A lot of those items normally were paid through special assessments in a lot of buildings. So the special assessments will probably be reduced because they'll only be for cosmetic things, but for structural things, they'll be funded through the reserves that have been accumulated over time. Keep in mind, though, you'll be paying reserves for the rest of your ownership within a condominium.
Now, the line items don't just include structural.
No.
That's electrical, structural.
Well, to act so complicate matters, as if it wasn't complicated enough. The only things you can't waive are the structural ones. There are certain other reserves that aren't related to these 8 items that are in statute. Pardon me, that you can still waive. For example, a good example is the elevator. I would think, quite frankly, that elevators are electrical components, but they're not considered that. They're not considered mechanical, they're considered elevators. So can you still waive them? Yes. So there are still some of the old fashioned reserves that can still be waived.
What are the 8 things that can't be reserved?
A structural foundation, roofs, electrical, windows, plumbing. There's, I mean, I don't know all 8 off the top of my head, but those are five or six that I just.
Only
I
one.
can't even imagine how even just taking the plumbing in this building and redoing it, what that would cost.
That's why we have to get someone who knows. to
Yeah.
give us an
So
idea.
we're not talking 10% increase, we're talking like 20, 30, 40%.
Not necessarily, because remember, you're spacing it out for the life of the asset. So you may, you don't have to fully fund it the first or second year. You're spacing it out. By the way, kind of a precautionary, and I know you guys are all over it already. There's a very strong demand for reserve companies and for engineers. Your guys aren't every single condo that's 3 stories or higher in Florida is going through this. So there's a very high demand right now for these companies.
Okay.
And that, the building already has a very strong relationship with
And
the
we don't
engineers.
know either if the city will be able to handle all this.
Well, that's the other
This
thing.
can take 2 years
Yeah.
before they give the.
And also you're lucky that you're getting through your recertification. Now, that's a really good thing. Because if not, you've got to start doing that, and every building has to be recertified now for 30 years, but you've already been through. So and Dade County is very strict. If you pass Dade County, you're gonna pass the state flying colors. So you guys are in a way ahead of the 8 ball, really, because you're so far along already what you're doing. So many buildings are not, they don't even have any.
We're still behind on the 50. How can we
Yeah,
get
but
it?
not real, but you're behind, but you're on it and you're working on it already, and it's greatly in progress.
There's buildings that are 60 years old and don't have their 40 years.
They have not been done, and there's buildings that are coming up on 30 years and already have to
Okay.
get it done, and have nothing done. They don't even have engineers.
I understand, but I have a question. No, sorry. Okay, I can, no, sorry. No, I understand completely the same from the insurance. Okay, it's okay. I understand for the certification. Okay. But what I don't understand, there is an increase for the HOA that is completely normal because there is an increase for the insurance. But why for the special assessment, we will do it the same thing that all building that here in Miami and do alone. And we pay a code. We pay the interest at the beginning. We pay, yes, we pay the interest at the beginning, and after we started to pay the amount like all the building. It should be better because what's happened, we have an assessment for 577 monthly, and everybody know that it will have another one and more expensive, right?
Well, at the time that was passed, the reserve was finalized. So we weren't aware of the reserve coming up, but we also had to demonstrate to the contractors that we had the funding in place to proceed with the work.
Mhm.
So bank loan was not a possibility.
The bank loan is not a possibility either because you
Of
have
the-
95%
That was the other problem.
I'm sorry, 95%.
transient. Because of your transient use. Banks.
Yeah, Alexander,
unfortunately,
we got a lot, but
try
I don't know
for
if
years
it's a
and
good
not
solution.
cover
Then you have,
10 years.
you pay for years.
It should be better. We have to find it. It should be better because
Financials as well.
obviously because today we pay 577. Okay, the HOA we did, yes. Exact. So the insurance is the thing that is, there is no possibility to have a lower price. There is no possibility to escape, right? So, but the assessment try to find something because it will starting, I don't talking about for the sale of the building, I don't talking for nothing. It will starting that a day we will pay almost 2,000 monthly for one studio. It's insane, you know?
So my answer to that is that this is a not-for-profit organization. That's how.
I know.
it's set up. So these are costs that we have to absorb and divide into proportional shares. That's what it is. And I think that what you're looking at is what's happening with respect to condominium ownership in South Florida. It's not just happening here, it's happening across the board.
Mhm.
And specifically happening for this building, in my opinion, is that we have 2 things happening simultaneously. We have increase in costs, and then we have decrease in revenues. And you're probably seeing some type of decrease in your revenues from what I'm hearing from the operators, which is
Yeah.
probably associated with a couple of things. One is a decrease in demand because of some recessionary issues.
Mhm.
All the stimulus money that was sent out has been used up, so the demand has been less. Second thing that's also happening is when they're in Miami and Miami Beach is getting flooded with short-term Airbnb rentals. So they increase the supply of short-term vacation rentals. If you read anywhere, there's a dichotomy going on. Regular apartment rentals are very, very expensive, and that's because they converted those buildings into short-term rentals. But when you increase the supply of short-term rentals, you have a decrease
Of
in
the
the
demand.
pricing that you're able to secure. So you have an increase in costs across the board, and then you have a decrease in revenues, creating what we call margin compression. Margin compression, and that's the problem. Because if we have an increase in cost, but we still have those revenues going up, there's no issue. The margin's there. You
Sure.
charge a higher price, and everyone's happy.
Mhm.
We have it both sides. We have increase in cost and a decrease in revenues, squeezing margins. And that's something the association is very, very concerned about. And then another thing I'll add, since you have me on video, is that we have a lot of operators and owners who participate in it, who rent to the lowest common denominator, which taints the attractiveness of Castle Beach for repeat business. We received an email from one of the unit owners. We're asking for his permission to circulate it because we have people who willingly rent to 6 people in a studio. They overwhelm the elevators, they overwhelm the pools. Then they have arguments and
Security
fights,
desk,
they overwhelm
okay.
security. And what does it do to potential reviews? And how much demand is there now for Castle Beach? While we have an increase in supply of other units to rent. So what you're doing is you're having not only an increase in supply in units to rent, you have a decrease in the pricing capacity because we have a tarnished reputation because of those activities. How many times have the police been to Castle Beach in the last week?
And the city has a lot more problems than she.
So if we're going to be successful as an organization, we have to, as a group, be able to raise the standards of the people that and that all falls on the unit owners, to have higher expectations of the operators they're using, so that they rent to a better quality customer, so they can maintain the standard of the building, so that we don't have pricing at $11. The other day, a unit owner sent
I saw.
an email saying that someone's renting a unit for $11. Well, what do you think an $11 rental is going to bring here? Wow. I mean, what do you really think an $11 rental is going to bring here? So I mean, that long term,
They put $200 in cleaning fees.
right? What happens? You get a certain population of people coming here.
$11.
Certainly not the people who fly first class, and certainly not the people who are refined and can pay a better price. You get someone who doesn't want to pay that price, and then when they get here, they argue and fight with everybody. That's exactly what we get. And what happens? Your customers get to see the fighting going on because they paid $11, but they're really paying $200. And they're in the market segment of the population. The market segment of the population that brings negative reviews to the building. So we have a lot of things here
It's a
that go
huge-
into it. It's not simply the supply of the supply of properties. It's also the quality of the people.
Also a problem related to the model of
Correct.
operating here.
Yes.
Because
yes.
many operators are giving a fixed rent, and then they face another.
Their car margin compression. I understand that completely. And that's one of the things that makes Castle Beach so attractive originally, was that it didn't have those restrictions. Anyone could become their own entrepreneur here. That actually, I think, has exceeded what that has. The byproduct of that is the standards are not standard. We have so many different variable the spectrum of standards. It doesn't impact it. And then when you increase the supply, that actually hurts the building because there's other choices for travelers to go to, basically.
George,
Yes.
isn't there a legal statute or something that prevents someone from pulling that kind of crowd and renting a studio to 4 people or 6 people or 8 people?
To answer your question, yes. We sent out a communication. I'm sure that you received it if you're opening the emails that we sent out. And and Kevin's here and Oscar's here, they try to intercept it. We have house rules that prohibit it. But we also have unit owners who are willingly putting 3 queen beds in a studio apartment and showing pictures of that online. But what do you expect people to ascertain from that? If there are 3 queen beds in one room studio apartment, who do you think the market segment you're going to get? It's not going to
It's a
be
huge
3
problem.
single people, or it's going to be 6 people. That's the subtle message that you're sending. So we can't tell you how you can furnish your apartment. All we can do is try to intercept the number of people in your apartment. But if you're an owner that's participating in that process, you're also an owner that's participating in this lower standard of Castle Beach.
So it's not the owner, it's the manager.
The owner. but only the owner actually controls the relationship to a certain extent. And
Yeah, the owner should find out.
they should demand a certain standard here. And that's what's happened. So compression and the margins is what the issue is. We could raise the prices at Castle Beach, but it's the increase in insurance was a non-issue. We're faced with both of that, and that's why it raised the concern. We're all concerned. And this board does not want to raise the maintenance. We want to do as best we can with what we have. And obviously, we're faced with the market dynamics that we just described. Insurance, with respect to the law, with respect to the increase in supply of apartments, with respect to regulations, and all that other stuff that goes into it. This is the end result. Any other questions?
I have an idea, and I've talked to you this separately. Every other condo hotel on the beach, we are the only ones that people don't pay for parking. Is there any way we can, and I'll help, if I need to be on a committee, you know, I'm willing to volunteer and research the idea. Can we have some income to offset these costs by either a registration fee or a parking fee? We've talked about this in the past, but it could be more necessary now than ever.
So we have to abide by this, by the condominium documents. The common documents provide that each unit owner has one space, not in the signed space, but an available space. So by writing the sign that they're able to do so. So we have their guests come in, they assign their spot to that person. We have a system in place that we would like to automate eventually that assigns that spot to that specific guest on behalf of the unit. Only once the unit owner that comes in, they have to pay first. The fact is, we do collect revenue from parking, and it goes into the operating budget. The forecasted revenue from the parking is huge. It's over $100,000 a year. It's like $120,000 a year. So we are getting some revenue. But to answer your specific question, majority of people don't pay parking, but it's within the condominium documents that allows them to sign space. That's the answer.
From what I understand, that the Alexander, the parking, they're allowed to charge the parking. The Casablanca, they have the same documents we have, and they're paying for parking over there too. So could we explore it? Can we find a loophole? Can we find a way?
I don't know what their documents say.
Without a registration fee. We have more work that we do at our security desk than I've seen anywhere else security do. They give keys out, they act as the concierge. They have to stand there when people are screaming because somebody charged them a $200 cleaning fee and $11 for the rental of the room. They gotta take all of that. And we have to pay extra people when it's busy. So is there any way to do, even with a nominal reservation fee, $100 per person, something that could be?
Yeah, no kidding.
The problem is real dangerous with these fees because you can only charge the fees that are either allowed by statute, which are very few, there's like 2, or you can charge the fees allowed in your governing documents. But if you charge, for example, a registration fee, a moving fee, an elevator fee, those kinds of fees without permission, you can get sued. And some attorneys are going around and doing class action lawsuits against condos and making a pretty penny. The condos are paying hundreds of thousands of dollars in penalties. So it's really very dangerous. Now, I'm not dismissing your idea. It would probably require an amendment to the government. And maybe there's a taste for that.
Well,
The other flip side to that is as follows. I'm just sort of pointing. Is it possible maybe needs to be explored further? And we're already talking about passing on costs to other people, right? We're passing on costs to unit owners. If we pass in a registration fee to every unit owner that registers someone, that's another cost they're going to complain.
it's passed on to the guests.
It's just the mechanism that needs to be refined. And comply with the statute.
Just looking for ways to
Yes.
offset.
But maybe we are thinking it loud. Maybe we are going to give an advance to the people that are from here. Okay. Yeah, because the other from this, not the this, we charge.
But I can tell you that one of the reasons why the security reception has been a little bit inundated is because in other years, there were other front desks that were open. And now it appears that it's entirely being full of
Well, the
security
city
reception.
requires it now. Since COVID, you have to check in at front desk that's 24-hour operated.
That's not a front desk, by the way. That's a you will
That's
pull
a
service.
security. Yes, and
So
nobody
security
else
will
gets
pull
keys.
So if anyone's giving out keys like that, it should only be a will pull service where the unit owner has everything done in advance. And all they're essentially doing is verifying identification, getting out the parking permit, it shouldn't be facilitating what the unit owner or the operator should be doing with respect to the communication with their guests. I guess you come up there and say, listen, I'm in room 101. She would say, okay, give me your identification. She compares it against that. Security function. If you have a vehicle, she gives them a parking permit so they can park their vehicle. That's what it's intended for. If it's gone beyond that, then it has to be refined, or unit owners and operators start applying with what its purpose and purpose.
Because of the circumstances, this would be discussed, asking not too much, but fee for registration and also for the parking, because this is an income that we use.
I got you.
It also gets complicated, then we have to collect the money, keep track of the money. Loss. It's gonna be.
I'll help collect the money.
I gotta be honest with you, just working with vendors, and I don't wanna say this against any other company, but just with Chalet, we have a very, very difficult time for spillage. Spillage is theft, right? So we have a system in place, Adisa does audits, security does audits, constantly, daily. And we try to come up with every mechanism to intercept the spillage. Because there were times when we'd see revenue go down and suddenly we discovered there's big spillage because there's some kind of racket going on. Some, they've infiltrated the ballet and they're getting all their fees waived. We have operators and unit owners who aren't paying what they're supposed to pay by using creative ways of getting around. This is just our reality. So to add to another business, probably make that entirely credit cards. But that would lengthen the lines, increase some personnel. There's training administration associated with it. So everything that you add to this becomes more complicated in terms of an operational logistics. That's another element of it. Not that it's impossible, it can be, but it has to be well thought out in terms of administration and logistics.
If you look at the reviews from our building, our general reviews, the slowness to get through the security desk is the biggest complaint of everyone. And I see lines so long, and it's not their fault. There's one or two people, and they're hand copying things, and everything's manual. There's nothing automated. It's
Can
not
we
their fault. They can only do one person every 4 minutes. I don't know what it times out to, but
There's some that are quick and some that are slow. And that's the direct result of the operator compliance with the process.
Today, so they need to do all the form. That's not the idea.
That's not the way it's supposed to
Make
be.
the full form.
Right.
They just print matching.
So they should pay.
So that's another question. So what are the biggest obstacles there? I mean, some people fill out completely, they go quickly. The people who fill in half, they go.
And another time.
They don't know.
Information is not released to the guests, so they come here that they don't know where they're going. They don't know.
No, I can see that. I work at an airport, and people say, I work at an airport, and the people want to know, where is the flight? As if they're in there's only one flight. Where is the flight?
Their first time of the year.
There's like 50 airlines there, 4 terminals, which I go, I park my car and I always get asked, if I can see you with the badge on or whatever. Where is the flight? I can imagine that doesn't happen here, it's probably because of poor communication. Because of who made the booking, but notwithstanding, that doesn't make it any better. I think that operators can improve on their communication with their clients. I do think that we should be able to automate it. I know we've done this, researching that. But it also, I think the biggest problem we've seen of late is the fact that all of the registrations have been done, where in the past we had operators that had their own offices out open and they took care of a lot of the questions and questions and concerns that take time to answer. And of course, only the parking had to be done there instead of the entire thing. Yes.
I wondered if we could use AI face recognition to have a quick check-in for people on one side of the counter, and the people that take a lot of problems, let those lines get backed up, but have a fast check like they have at the airport. The TSA pre-check, so they can just zip through, or they have a dedicated person in security It
I
can
think
deal,
we should take baby steps and get our operators to, and owners to comply with the regular basic requirements for their insurance. That'll be the biggest thing we can do. The second thing is be automated perhaps to get it done.
It's so
I think the
easy.
AI is a little, I think the AI, and I'm gonna be just quite honest with you, is beyond the abilities of anyone here.
Yeah.
That is, and there's liability with respect to that. That's way beyond.
Shane's laughing because he's already mastered.
And I'm just being honest, as an AI specialist here, I mean, I can tell you the one thing, there are a lot of organizations resisting AI. For obvious reasons, and to tell you that the lines at the airport are using it, that's not necessarily true. They have, and I can't disclose it because it's sensitive security information, they have another system that speaks the line. Has to do with your driver's license. Everybody here, real ID?
Yeah.
That's what it is.
Can we implement that?
No,
While back, I also managed the vendor, they have Google Sheets. And you just put the name on the sheet, same information we put on the registration, and it's all in the computer. Nobody has to print, copy, and staple, and it's just. What is it called? Google Sheet.
it's an electronic processing basically.
Right.
Saves-
She has a-
We agree that has to be stored.
And then you figure out how you do the parking ticket adjacent to that, something like that, because that's really the biggest complaint.
And also, I think the principal reason is that everything's been dumped on them and it.
Yeah, and I feel sorry for security. By the time that person, like some of these people are in the line for an hour and a half, and they're probably nasty with you guys when they get to the front, right?
The ones that pay $11. It just goes with the market segment of the population. We get them at the airport soon. So they fly in here and they fly back. So
Probably that would be a key line, they can see the thing, the guest, I was said, doesn't know where they made the reservations. If you're an event center, you have to call the person or the entity where you, and then that entity, your operator doesn't answer.
Oh, that's
And
with
then
the code.
everything there.
Any other questions, guys? We pass the motion, we're done. Nothing else on the agenda. So I guess we close the meeting right now. And Turn it 8. All right, thank you very much.
So when did the city allow everyone to do an Airbnb?
This was always transient. It was always transient. It became popular like.
Right, we were an official condo hotel.
Right.
This was,
The city's allowing everybody to do it, and now there's new buildings being built that are free. I just read an article today. And
That's gonna-
I'm forward to it.
that's gonna destroy hotels.
It's making it impossible for people to rent a mobile apartment. Because of all the restrictions. But the rentals are- Taking out the.